The first thing to note about Iran is when we look at how markets have reacted, the first thing to note is that the market reaction has been very disciplined. Right? The key market to look at when we're thinking about Iran is the oil markets. Oil markets predictably have gone up, right? So oil prices have gone from, in the 60s and 70s to close to $80 a barrel. That's a fairly modest move relative to what we're seeing in the Middle East, and it suggests that supplies of oil are adequate for the moment, right? And the other thing that's really important about oil markets is that oil markets are very sophisticated commodity markets. The people who are involved in trading oil, these are very well-informed investors, and these are people with real assets at stake. So when we watch oil prices move, it's a pretty good indicator of at least market perception of risk, right? And right now, that move in oil prices was very orderly, and it's exactly what we'd expect. When we look at broader markets, look at stock markets, the move has actually been fairly modest, particularly given that we're talking about a fairly major conflict in the Middle East. Right? So we saw stock prices come off, looking at week to date, come off, just over 1%. And that's a fairly modest move in stock markets.